Hello everybody, my name is Ty Bernicke and I'm going to be doing your monthly market update for January 2024, and today I thought it might be beneficial to talk about a little bit about tax strategies for this year and for 2025, because starting in 2026 the Trump tax cuts expire. So many people will find their tax rates increasing starting in 2026. So one of the things to consider is, what can I do now to potentially pay taxes at a discount on certain assets to avoid paying taxes at a premium in future dates? And the reason this is significant, again, is because currently here's our tax rates that we have today on the left-hand side of the screen. And you can see most of the tax rates are going up starting in 2026. In addition to the tax rates going up starting in 2026, many people will find other tax benefits go away as well. On top of that, if you also think about your own personal situation and think about what's the likelihood of me paying higher taxes in the future at a higher tax rate for a variety of different reasons, well, in addition to the Trump tax cuts expiring, many of you will have required minimum distributions on IRA, 401k, 403b types of assets, which is a way of forcing people who have put money into tax-deferred retirement accounts. You're forced to take money out of those retirement accounts in the future and pay tax on it starting at either age 73 or 75, depending on your present age. So that can push you into a higher tax bracket in the future. In addition to that, the size of our national debt, of course, is at historic proportions, and there isn't a law that says the government can't increase tax rates on everybody above and beyond the current tax rates. Finally, on top of that, if you're married, one of the things you have to think about is, what is the lifetime tax bill you and your spouse are gonna face? Because ultimately, it's likely that one spouse will predecease the other spouse, leaving the surviving spouse in an individual tax bracket. And so when you're in an individual tax bracket, if your income is virtually the same or similar to what it was prior to losing your spouse, you go from filing individually from filing jointly. And of course, that can also increase a person's tax rate. So there's all these reasons above and beyond the Trump tax cuts, which can make strategies that employ paying taxes today at a discount to avoid paying them at a premium in the future beneficial. So one in particular that I thought I'd talk about today that's a popular strategy employed by many is converting money from the tax-deferred bucket to the tax-free bucket. So the tax-deferred bucket would include things like IRAs, again, 401ks, 403bs, 457b plans. All of those work similarly from the perspective that you get tax benefits up front when you put money into those types of investments, but when you take it out, it all comes out on a taxable basis, and eventually you'll be forced to take it out of that bucket starting at either age 73 or 75, depending on your current date of birth. If you do a conversion and pay the tax on monies that you convert over into this bucket, when you're doing that, you always want to be mindful of the tax bracket that you're in, and you don't want to push yourself from one tax bracket to a much higher tax bracket. But if you do this over time, and you can keep yourself in the same tax bracket you're presently in, or in a reasonable tax bracket, once the money's in this tax-free bucket via a Roth IRA, that money can grow income tax-free for your lifetime. You can take income tax-free distributions for qualified reasons during your lifetime. If you don't spend everything in that bucket, you can leave it to your surviving spouse and they can take income tax-free distributions over their lifetime. And if there's money left in that bucket that goes to your kids can even take income tax-free distributions from that bucket. And so essentially, that's a great way to protect yourself from potentially increasing tax rates for all of the reasons that I just mentioned earlier on in this brief talk. So if you're interested in this strategy, or if you're interested in other strategies that you can employ today to pay taxes at a discount to avoid paying taxes at a premium in the future, feel free to give one of our advisors a call at 715-832-1173. 3, or if you want to learn more about our office, go to www.bernanke.com. I hope you found this beneficial, and I hope you have a wonderful 2024. Thank you.